Today, without a shadow of a doubt, has been the greatest day in our investing career, all of 6 years. But let's check it out, let's crunch those numbers and see what's happened. It was literally only a few days ago when we posted the last episode, late albeit, of Road to 100k. That was episode 90, this is episode 91. We've subsequently put another $1,000 into the portfolio. We were sitting just around the $95,500 mark. Well, what has happened? It has been epic this last week, that is for sure. So another $1,000, you'd expect we'd be up around the $96,500 mark. Well, unfortunately, that has not happened, but let's go and check out the portfolio and see exactly what has happened. And here we go, here's the portfolio. So Road to 100k, how much have we got? 99,700 and some change. Wow, pretty much an amazing, fantastic week, you gotta say. $99,700. According to this, we've only got another $260 odd to go. Wow, amazing. Let's go and have a look, see what's happened in terms of the wallet. We'd covered this in the last episode where we put another $1,000 over to the Sharesies save, but subsequently, after the last episode, we took some money out, we invested, we got the monthly plan once again, the $7 plan, we put $1,000 into ANZ Group Holdings Limited, and we put the other $3,000 in an auto invest into Turners Automotive. What has happened to Turners Automotive? Well, it's either good news or bad news depending on where you're coming from. Where I'm coming from, it's all good news. Now, considering we put our money in on the 21st and the 22nd because it split the orders a little bit on the 21st and the majority of it at a slightly higher, well, I think it was a slightly higher price on the 22nd. Well, this particular stock has just ballooned up, and the reason is they put out their earnings today and it was extremely favourable. They had their overall profit had increased, their overall net earnings had dropped slightly, but in these market conditions where retail was not doing particularly well, Turners did exceptionally well. And as a result of this, we were paying roughly around $4.76, something like that, for the shares when we bought them just a few days ago. Well, literally three or 4 days ago. And it's since ballooned up to $5.08. So every single share that we purchased, we've pretty much gained an extra 23 cents. We put $3,000 in. How many shares do we get for that? 600 shares. 600 shares times 23 cents. Oh, gee. I don't know. It gets pretty confusing, that's for sure. But yeah, it's a good tidy profit regardless. Moving on to the application, let's have a look. And today has been pretty much the greatest day of investing in our lives so far. We've made $1,986 just today. Wow, I can't believe it. That's almost $2,000 in one day on a portfolio of, well, it's not quite 100,000. So that's, well, literally a 2% gain for these particular stocks overall. Some of them went down today, most of them seem to go up. But Turners, look at this, 6.72%, amazing. And as you can see here, we got $23,808. It's our biggest holding. We've made $5,318 for dividends and capital appreciation on this particular stock. That is a fantastic gain overall. According to this, how much are we up? Well, 27.2% on this particular stock. Not as good as Somerset Group Holdings, but hey, I'll take it nonetheless. And it is a quarterly dividend payer, so that means they'll be paying out probably in January, and we will get, I don't know, maybe a few $100s. Fantastic. Let's go and have a closer look at Turners Automotive. $5,318 profit, $23,808 invested in this particular company. No, all our eggs are not in one basket, but a sizable amount is, considering the portfolio is worth just shy of $100,000. 23, almost 24% of our holdings are in this one company, and it's purely because they are quarterly dividend payers. We want to get those dividends on a regular basis throughout the year. And you can see our trades here. On the 21st of November, we bought 10.89 shares at $4.66 for a total of $50, and Sharesies didn't do the balance of them until the following day, presumably when sellers were available. So 29 $149.27 went through the following day at a higher price, $4.79. So if we even those out, I think the average price was somewhere around $4.76, something like that. As I said, the share price has ballooned up. It's now $5.08. Who knows what it'll do tomorrow? It'll probably soften. The share price will probably go down. Our portfolio balance will probably go down. But who knows? You never know. It might still go up. Who knows? And you can see on these charts here, it's just been going up all this week on the fortnight. Wow, that's just, look at that. It's just boom. So it's pretty good. We bought when we bought. It's nothing to do with strategy or anything like that. It was just sheer luck, to be honest. You can see this massive mountain going up the mountain here. That's made a huge impact. And yeah, fantastic. Now on this channel, I'm not a financial advisor. This is just what we've done. Take it with a grain of salt. If you want to invest in this, do so at your own risk, but this is just what we've done. So chances are this stock may go down, it may continue going up, it may do nothing, who knows. But this is the risk of investing, and we certainly are reaping the rewards for this particular stock at this current time. Having a look at the payment month, so in November we're pretty much run out of stuff. The warehouse has probably got some stuff to do. They're probably not going to pay anything, or if they do, it won't be till December. We got a few payers in December. We'll be expecting a little bit of money from December. Turners, once again, January, they pay in April, they pay in July, and they pay in October. So we'll be expecting, as I said before, a payout in January, which will boost up the January numbers because our January numbers are pretty poor with only one pay in stock at this stage. In terms of the share allocation, well, Consumer Cyclical has gone up because of the Turners buy. It's approaching the financial services. Not too worried, we just want to get to the 100k. The wallet has dropped down. It was well over 4,000, or I think it was 5 or 6,000, can't remember now. But because we actually have bought some shares, we're up to $2,666.69. Moving across to the NZX50 charts, you can see everything's gone up. I'm not sure why that's got a dip there, but however, we'll run with it regardless. Maybe this is sort of going back to the 19th, 20th. I think we might be behind the 8 ball on this, but never mind. Cut a long story short, market has gone up and it's been good in the last couple of weeks. The dividends page, what's happened? $3,634, so we're well on top of where we were this time last year by, well, how much we got there? We've got roughly around $800 more than we had this time last year, maybe, well, $750-ish. But we do have some more money coming in December, $349. That's going to take it to roughly around the $1,000 mark of increased dividends getting paid out on this portfolio, which will take us over the $4,000 mark by the time everything's all said and done. $4,000 on a $100,000 portfolio. If we do nothing next year except just hold the stocks, if the capital appreciation doesn't happen, if the stocks don't go up or down, doesn't really matter, to be honest, but we get $4,000 worth of dividends. That's pretty much all paid for via the imputation credits, so they don't get double taxed. We should make roughly around $4,000 after tax. Pretty happy with that. $4,000 after tax. Great. Having a look on the NZX.com website, you can see here the massive gains here today. 1.18% for the NZX50, 1.23% for the NZX20, and for the NZX10, the top 10 companies in New Zealand, 1.5. Excellent. Let's go and have a look at the announcements, because there will be some announcements in here. Let's click on that. And there are a lot of announcements today because it's a reporting day. It's the half yearly, generally speaking, market updates, all that sort of stuff, half yearly stuff. Here's the Turners one. We got a whole bunch of smart shares through NZX themselves with their ETFs, etc., which have all done reporting. The market is up, so obviously things are pretty favourable at the moment. We got this one here. Let's go and click on that. And it does say here, resilient business continues to grow through the cycle. Revenue down 2%, earnings before interest and something else, taxation is it maybe, something like that, up 3%. Net profit before tax, I think it is, don't quote me on that. I don't know all these acronyms, but however, it's plus, so that's good. Earnings per share plus. Quarter 2 dividend declared at 7 cents per share, and it's all pretty positive stuff. So go and have a look for yourself on the nzx.com website under their announcements section. Have a read, it's all pretty good. And the last thing we want to look at is the road to 100k. The struggle so far. Well, is it a road or is it a struggle? But this is when we started. Well, how many episodes? We're up to episode 91, so let's take it as 91 fortnights ago. We put in $1,000 every fortnight, $500 a week, consistently over the course of the last just over 3.5 years. And this is what happened. You can see this balance here is the purple line here, a bit hard to see maybe. The total invested, well, consistent. Yep, $1,000 a fortnight, and generally speaking, for the majority of this particular portfolio, it has been underwater. You can see this purple line here under the green line of the amount invested. Up until very recently, only in the last few weeks, has this thing actually taken off. And it's a combination of things. It's to do with, well, what's it to do with? It's to do with housing stabilising, it's to do with interest rates coming down, government performance doing better economically, possibly to do a little bit to do with, just generally the economy stabilising and shares becoming more attractive. Unemployment potentially might go up, which will stall wage growth. It's all intertwined. I don't fully understand it. I'm not going to pretend to. But the good news is, by simply doing this consistently, buying, holding, get the dividends, reinvesting the dividends, as you can see, it's been a long road, and we're just on the cusp of the $100,000 mark. I can't believe it. It is fantastic. Couldn't believe that, well, 3.5 years ago we'd ever get to this point. It seemed to drag on. Been a lot of episodes, but we're just about there. It could happen tomorrow. It might happen in the next pay cycle when we put another $1,000, presuming if the portfolio does dip a little bit after today's fantastic effort. I'm not going to be surprised if it does. So we could have another couple of episodes to go. However, having said that, maybe we won't need any more episodes. But we'll do another episode when we do reach that magical $100,000 mark regardless. And that almost wraps it up for this series of Road to 100k. We will post at least one more video once we make it to $100,000. Who knows, the market may still go down. It's probably bound to after such an epic day today. It's bound to go down a little bit and consolidate, as it were. So thanks for sticking around. Don't forget to like, subscribe, leave a comment down below, and we'll catch you later. Have a good one. Bye bye.